Hello
Hello
guys,
guys,
we are from
from
group
group
3.
3 are gonna discussion about answer of mid exam taxation 2.
First of all, let us introduce ourselves. My name is Azahra Anastasia Kusnendi.
My name is Rara Devita Rahma.
And my name is Restu Ayudia Karina Pasha. So this is answer question number 1. For the first retail, it is 22 million minus 13,200,000 equal 8,800,000. For manufacturing, 55 million minus 33 million equal 22 million. For logistic, 11 million minus 4,400,000 equal 6,600,000.
And for the number 2 is net payable. The formula is output VAT minus input VAT. And the answer is 37 million 400.
For number 3, we have to answer. There are benefit and challenges. For the benefit, the first one is simplified VAT reporting, optimized cash flow, compliance efficiency, reduce risks of double taxation, and cost saving. For the challenges, we have complexity in intercompany transaction, regulatory compliance issues, risks of VAT mismatches, timing differences in VAT recovery, and the last one is internal control and audit challenges.
Next, answer question number 2. The first, business must register for tax and file their returns on time. Late filing or underpaying can result in fines, interest charge, or even audits.
And the second is digital tools used to automated compliance tracking and data reconciliation. These tools significantly mitigate risk of non-compliance, use digital tools, enhance accuracy, efficiency, and transparent reporting, reducing likelihood error.
For answer number 3, we can do timely registration. Timely registration is ensure the enterprise register for NPWP or NPPKP as soon as required. Number 2, use digital tools. By implement e-filing and e-factor to automate and simplify tax reporting. Number 3 is regular tax audit. Conduct internal review to catch error before filing. Number 4, training and awareness. Educate staff on tax rules and deadlines to avoid mistakes. Number 5, the last one is hire a tax consultant. 6, professional help to manage compliance efficiency.
The answer question number 3. The first is at 11% VAT. VAT collect from customer 66 million and VAT paid on process 27.5 million. Net VAT payable 66 million minus 27.5 million equal 38.5 million. At 12% VAT, VAT collect from customer 72 million VAT paid on process, 30 million, and net VAT payable 72 million minus 30 million equal 42 million. The business now has to pay 3.5 million more in tax.
For the answer in the second is the increase in the VAT rate forces companies to carefully balance pricing strategies and profit margins. If they raise prices to cover higher VAT, the customer could buy less the product and the could have several consequences. But if they absorb the cost, their profit margins will shrink because they're paying more tax without charging customers extra.
The third is minimizing tax burden, claiming VAT refunds, avoiding penalties and compliance risks, enhancing financial accuracy, better decision making, facilitating smooth audit.
Next, answer question number 4. The first, stamp duty is a tax that makes legal contract official and legally binding. It applies to things like property, sales, business agreements, and financial transactions. Paying it ensures the document is valid and can be used in court if needed. Without it, a contract might not hold up legally, which could cause problems later. It also helps prevent fraud and support government funding.
And the second, the stamp duty is a tax on buying property, shares, and legal document. Business usually cannot deduct it from their tax. But when they sell an asset, the stamp duty paid can reduce capital gains tax. Unlike VAT, which apply to regular purchase, stamp duty is a one-time cost. Sometimes both stamp duty and VAT apply to the same transaction, making it more expensive.
Failing to pay stamp duty on time can lead to several legal and financial consequences, including the first one, legal consequence, invalidity of document, penalties and fines, restriction on property transfer, regulatory issues. And the second one is financial consequence. There are three. The first one is accrued interest on late payment, delays in business transaction, loss of tax benefit, mis- mi- mitigation strategy, implement a compliance tracking system to ensure timely repayment of stamp duty. Consult tax and legal professional to understand the applicable stamp duty rate and deadline. Regularly review legal and financial documentation to ensure adherence to stamp duty requirements.
Next, answer question number 5. First, managing tax in multinational company is not easy. Every country has its own rules, tax rate, and deadlines, which can be confusing to keep up with. Laws change often, and even small mistakes can lead to big penalties. One major challenge is transfer pricing, setting fair prices for transactions between different branches of the same company, because getting it wrong can mean extra tax or audit. VAT is another tricky area since tracking tax on sales and purchase across different countries need to be precise. Without a solid tax management system, a company could end up facing finance delays and unnecessary financial losses.
Digital tools like e-filing and e-factor make tax reporting much easier and more accurate. Business can submit their tax correct early and on time, reducing the risk of error. E-factor help ensure invoices are valid and match tax record, preventing fraud and confusion. It's easier to keep track of transactions and stay compliant with tax rules.
Uh, the third is by use digital tax system. Use e-filing to send tax report online quickly and correctly. Use a factor to manage VAT invoices digitally, reducing mistake. Set up e-billing to pay taxes on time and avoid penalties. Second, by use automate tax calculation. Use accounting software to automatically calculate income tax and VAT. Link tax system with financial record to reduce manual work. The third, by create a tax compliance calendar. Set reminder for tax deadlines to avoid late fees. Schedule regular tax reviews to check for mistake before filing. The fourth, by train employee on tax rules, provide training on tax laws and how to use digital tax tool. Keep staff updated on any tax rule changes in Indonesia. The fifth is to prepare for tax audit. Keep all tax documents well organized for easy access. Regularly check tax record to ensure accuracy before audit. By following this step, the company can make tax reporting faster, avoid mistakes, and reduce the risk of audit or penalties.
Thank
Thank
you,
you
guys.
guys. Bye. See you.